All right, guys, welcome back. Let's talk about yesterday, try to analyze the stock charts, and figure out where this thing's going to continue to head. Again, this is just my opinion and how I'm reading the charts, not trading advice. So yesterday, what did yesterday do? Let me flip over to the SPY here real quick. Just to summarize what yesterday's price action was. Yesterday was a bull trap, or yesterday was, it basically sprang the trap, I guess. The bull trap was set back up here over the last week or so, and yesterday sprang the trap. So it also set the momentum to the downside. So you should be thinking, or at least I'm thinking, that it's now a sell the rip market. So that's what you want to do, and you'll want to look for pops back up to support, maybe overshoot resistance, pops up to resistance, and then that's where the market should fade, and that's what we're seeing today. This is confirming. So look at the price action today. So we gapped higher and sell the rip. All right. I don't expect today to break the lows from yesterday, and in fact, I think we probably have somewhat of a breather day where we just chop around, maybe end the day slightly higher, and that's what I think is going to happen today. I just think over the next week, coming weeks, maybe months, I don't know how long it will take, we will work our way lower because the momentum is now to the downside. So rallies will be sold into, and that's what we saw today. We popped up relief rally after the big move yesterday, and they're now selling into that. So the short end, the short trade continues to work, and I think that's going to continue. So let's look at the charts, see what actually happened. Here's your breakdown of the bearish rising wedge and the bull trap that was set and sprang. The bull trap was when you overshot the bearish rising wedge. There's your bearish rising wedge right here. That's a bearish pattern, should resolve to the downside, but instead they set a bull trap and then sprang the trap right here. So now we're in clear sell the rip mode. It's not a buy the dip mode, it's a sell the rip mode. So there will be an opportunity to buy the dip. I think down here on the SPY, we've got a couple zones. We've got one here at 295. That's pretty good support right there. So we might get a little bit more of a sustainable bounce, something that can actually last a couple days or weeks. And if we don't, then we should have some pretty good support down here around 280. So that's where I see that going. We popped basically today. You can see we popped up to about three. Let's see. Now, right in here, about 340 or no, sorry. Right? Yeah, right in there. Nothing major. The level I'm more concerned with is now going to be probably this gap. The gap up here at 311, 312. I do suspect we'll retest that at some point, probably before heading a lot lower. Maybe we come down to this 295 and then we'll pop up and test the gap and then work our way lower. Again, if this is a bear market, it's not going to do it all at once. We're not going to just go straight down. We're going to, zig and zag as we slide the slope of hope, and that's what a bear market does. So there will continue to be rallies within the downslide, continuing to feel hope that the bull market's not over. So that's what I see. I see 312 right now is kind of the area where I'll watch things where it can overshoot slightly, but it really should hold. It really shouldn't get much beyond that. And then on the downside, we've got 295 and 280. So we'll watch those levels. Moving on to the Qs. For the Qs, we've got this uptrend line here. So that's really what I'm watching there, is this uptrend line. I'd like to see us hold that. It's not the cleanest line, but if I move it out like there, maybe it's right there. I'd like to see us hold that uptrend line and get rejected. And that's what happened today. You can see I'll leave the line right here where I had it. We popped up right to the resistance line and we're rejected. We're now selling off, coming down into some support, it looks like. Yeah, this is the former all-time highs right here at 237. So we're there. That might be as far as we go today, to be honest. With such a big move yesterday, I think a lot of that, I think we just need to take a breather. So we might just stop short right here. Something to take note of, if we head back down to the lows down here again where we were at yesterday, that's kind of the second attempt. We're going to probably pop it and go lower. So I see support here at 229 or 230. We'll just call it 230. We've got some support. Again, that's the gap, the old gap right here. So maybe we come down and tag that, have a reaction, and work our way into the gap, start to fill the gap. Again, this is a big change in trend. So I don't think we're going to just come down, hit the first support, and then recover the trend and continue up. I think what we're going to do is ride the slope of hope, where we will pop up, hit resistance, and continue to work our way lower over time. So we'll watch this, see how this plays out. But don't be complacent. This was your bull rally, or your bear market rally potentially. But this was the rally that we've been in the last few months. That rally is now broken. We broke that rally, that trend. So we should now, and you're seeing confirmation that trend is broken this morning with the sell the rip. Noticing how the market trades after it pops. When you have a big break in trend and then we have a relief rally or a little pop and they instantly sell into it, that tells you that there's going to be downward pressure. We're going to be selling the rip, and that's going to continue to put downward pressure. We're going to continue to work our way lower until we find some sort of bottoming pattern. All right, so I'll look for the bottoming pattern as we get down, but right now we're up at the highs. We've got a ways to go. So, and if it doesn't show up in the form of divergences or reversal candlesticks, something, then we'll just continue to go lower. XLV here. I do like this one for a short trade, but what I would do is wait for it to break this level, 97. It's a well-watched level, so I'm not sure if you're going to get an intraday shot at it. It might try to gap down, but you can see what we did today. This was the line right here we were in. When we broke this line, we broke it with a gap right here. This is where I added back my short. I was previously short in this, but I didn't like the price action of it just grinding sideways, kind of grinding up. So I got out and waited for a sell signal. We got that yesterday, with the big gap down and a break of this trend line, and then impulsively sold off, broke through this support here. I mean, it was just a nice sell-off all the way down to the bottom of the range, which was support. And that's exactly what I called out. I took I took some profit here at the bottom of the range, and now I'm holding the rest of the trade, looking for a break of this range. So this is a really long sideways trading range. We've been in it for 53 days, so about a month and a half, almost 2 months. And so when we break, if it breaks, you should see a nice impulsive move down. I've got a couple levels I marked out. We've got some support right here. This is the first level of support, 95.50. I don't think that'll hold. I think that will break, but we've got another level of support here at 90.80. We're probably going to get a reaction around there. So could see us coming down there, tagging that. After we might struggle with this range a little bit longer, and then we'll break, probably come down, tag that, and that might be it for this trade. I'll have to keep an eye on it. But for now, I'm just going to kind of have these levels marked out, and we'll just evaluate it if and when it gets down there. XLK, so this is what you want to see. This is what you want to look for when trying to figure out where the market's going to go. Look, nice clean uptrend, and XLK's technology, it's basically the same as triple Qs. So you've got this uptrend line right here, and we broke that yesterday. Tech didn't want to break it at first, but it gapped down, sold off impulsively. Look, no reaction through here, so it just sliced right through. I mean, there might have been a few minutes where it struggled with it, but the hour candle sliced right through and didn't really look back for the rest of the day. Closed, at the lows. Today, they popped it. This was your kickback rally or another objective area to get short if you hadn't yet. So this is a sell the rip, but it kicked back to the trend line and was instantly sold into. So that just tells you that it's a sell the rip. You had a kickback rally, you had an opportunity to recover it. They could have even gapped this thing back above support and held and start to move higher. they've done that several times in this rally here where they've looked like they were going to break, and then the next day they gapped it up like this. They came down to support, kind of held it a little bit. If I can move in, I'll show you what this tells me and how people fell, just as a quick lesson. Gap down, sold off impulsively, just like yesterday. It did hold, and they moved it higher, but then at the end of the day, they sold it off again right at support. So it looked like it was a head fake, like it was going to gap lower, but the following day gapped up and ran. So they were doing that quite a bit. And here's an undercut here where it closed right there, and then the following day it recovered it and bounced higher. So, but this is different because they sold off, closed at the low, gapped higher, and now we're seeing the confirmation that they are stepping in and selling when they hit that. So this is now clear resistance, and we should continue to move lower. So a quick lesson on XLK, and tech's so important because tech is basically it's 20% of the S&P 500. So following tech is really key to understanding where the market's going to go. Financials, it's the same thing. Big impulsive sell-off, gapped higher today. They're selling the rip today. We'll see. I think it's probably gonna. I think the move's about done for the day. I think it's probably just gonna taper out and chop around, maybe move up again. But we'll see. Here's the Walmart trade continuing to work. We spotted this one. I've been in this one for a while, but it's continued to work. So as long as the trade continues to work, doesn't tell me with the chart that it's not going to work anymore, then I just stay in it. And so sure enough, continuing to sell off. We're now heading down to break, if I can get it, to break the most recent lows right there, 119.44. And it looks like we're going to head down to this 117. My target for this, now that I've really seen the market and the market looks weak, trends reversing, and Walmart has looked weak, even when the market was continuing to move up, my target's going to be down here at the bottom of this bearish rising wedge. And this is a big wedge going back quite some time, back to 2015. So my target's going to be down here to start, 106, 107, depending on when we actually get there. I'll take some profit there, and then I'm going to wait and see. I want to see if this is going to, we might contend with the bottom of this wedge for a little while, and then ultimately break the wedge, and there could be a bigger trade here. So I'm going to kind of watch this, but I always look for at least an initial profit target, and this is going to be at the bottom of the wedge there. Someone wanted me to look at XOM. Oil stocks, so we'll just look at this one, and I didn't have it charted up, so I kind of did a quick chart of it yesterday trying to find the nearest support level. So here's what I see. I see support here at 46.28. That's where we closed at right there yesterday. But if you roll out, you can see several reactions around that trend line. You've got one here, you've got there's a reaction right there. Gapped right up to it. You can see how the candle just held right there. There's a reaction right there, there. So lots of reactions. It's that should be support, and that's why we stopped. That's why we stopped there yesterday. However, if it looks like we're coming back down to it pretty aggressively, so we might slice through this and head lower. So you're gonna want to watch for that. I don't want to buy. I'm not long ExxonMobil. I don't want to buy ExxonMobil. Look at this. You've got a little bit of a uptrend line right there. Yep, that's pretty clean. So you can see we broke it, back tested today, selling off. So I'm not long ExxonMobil. I am interested in owning it. But again, what I'm looking for in ExxonMobil is a couple things. One, I'm looking for another leg down and the charts to confirm that we're going to get that next leg down. Maybe, probably undercut these lows potentially. And I'm looking for ExxonMobil to cut the dividend. So if they do that, we make another leg down, they cut the dividend, that'll wash out a lot of the anything bullish in ExxonMobil. It will be, kind of a dumpster fire at that point. That's when I start to look for signs of life, and I start to look for, the opportunity to buy the stock. So again, a very common my mentality around a lot of things is I want to buy good stuff, but I want to buy it when nobody else wants it, and after everybody wants it, I look to see, when it gets overheated, I look to sell into that strength. So buy weakness, sell strength is basically the mentality, but at the same time, the charts tell me what to do, and I just follow the charts. And this is why I got short DraftKings. I think they're online sports gambling or something. So this stock, the reason why I shorted it, one is nice clean nice clean channel trend line. It's been rallying very strongly. I mean, it's up. Once it started this trend line, it's up. It was up 283%. So monster rally. Monster rallies sometimes have monster pullbacks as everyone scrambles to take their profit. So this was one of those stay-at-home stocks, a lot like Zoom and stuff. And I know the news media keeps saying that we're going to have like a second wave. And yeah, we might. I don't know. But the reality is that I'm not trading off any of that. I don't follow. My trade thesis doesn't have anything to do with the pandemic. It has to do with more economic weakness. I saw the economic weakness. The Fed was cutting rates and reducing their balance sheet in 2018, trying to stimulate the economy. That was well before the pandemic. So the reality is that the economy is just weak. It needs stimulus. It needs continued stimulus to keep it up. And this pandemic is just really was just the match that lit the tinderbox. So that's what we got. That's my general thesis. That's what I think's going on. So we're looking at this selling off. Probably look for this to come down, somewhere right in here, $30. So we'll look for that, and I'll just have to evaluate what's going on here once we get down there. I think it's heading down there pretty quickly. And we'll wrap up with Microsoft and Apple. These are just the two kind of juggernaut trillion-dollar companies. I watch these because these are bellwether stocks. They help you understand, they're kind of the leaders that have the power and the weighting to drag the market higher. So you want to understand, if they're putting down more pressure on the market has no chance of really going up without these two guys for the most part, anything sustainable at least. So here's Apple. Looks the same as everything else. We had a kickback rally this morning, selling off. This thing's going lower is what it looks like to me. I think we're going to, we're probably going to come down to this 320-ish level. I don't have the cleanest area. Maybe something like this down here to 325, 324.50, somewhere right in there. Maybe we hold in there for a little while. Microsoft. So Microsoft didn't break support yet. This is the one that still looks relatively strong. So what I'm looking for, we're probably going to come down to this support line here at 185, and that a break of that is going to set in motion the continued momentum down. We should see it given the nature of the rest of the market, but you got to wait for it. Basically, wait to see it do that. So. And then, I got one more. TVIX, someone asked me about this. All right, so everyone loves to trade TVIX when it's exploding higher. But here's the thing. A lot of people, it's the tendency of a lot of people is to chase markets. It's just, I think it's just inexperience in markets, I believe. People not really having a lot of experience looking at charts and actually trading markets that when they see a move, they want to chase it. And what my trading style is to look for the move before it happens, and then if I see the initial beginning of it, then I can jump on it. But after a big move has happened, I don't look to jump on it and chase it. That's exactly how you get burned. That's what happened with everyone recently in the S&P 500. Everyone was chasing. And everyone was buying, saying buy it, market's going a lot higher, we're going to all-time highs, and then big huge down day just wipes those people out. The late to the party people. So if you're early on a move, you're usually okay. If you're in the middle, you can usually be okay. But when you're chasing a vertical move or things are just going crazy high, you end up getting wiped out a little bit. And going back to TVIX, just to kind of reiterate what I'm talking about here, here's what we've got. We've got this trend line support right here in TVIX. We've undercut it a couple times, and each time we've undercut it, there's been a nice 50-60% rally. That's what happened here, and then again right here we undercut it, and nice huge rally. Now this could continue. We could have a move up to 377 or a nice impulsive move higher. But the thing is that the higher it goes, the riskier it is to be buying it. The higher the probability is that it's going to stop and reverse. So what I like to do with TVIX is buy it around trendline support. If you're a person that was buying it, around here in the trendline support area, maybe you bought it right here at the close the other day, right at support, then I like to sell into that. So if I see a huge exploding move, I take my profit and I'm happy with that trade. I don't try to run this thing up too high. I'm not expecting TVIX to get up to this high right here, this peak. Even though you can see it on the chart, this move right here in TVIX happened when the market was in a long bull run, and all of a sudden it reversed and everybody had to scramble to get off, change positions, and the volatility exploded to all-time highs, I believe. So I don't expect this to happen. Even we could be in a bear market and work our way lower. That doesn't mean TVIX is going to keep going higher and higher and higher. TVIX can chop sideways and just kind of grind sideways, go up and down. TVIX can move lower. Volatility oftentimes will actually move lower as the stock market's moving lower over time. So even if we pop up, higher, I would be looking to sell into that. That's just my opinion. And just wait for the next opportunity. What you want to wait for is volatility to subside. Everybody gets complacent. It seems like the market never wants to go down, or just everybody's on kind of one side of the trade. It'll happen again, even if we're in a bear market. There will be times where everyone will start to, think the rally or the sell-off's over and the bear market's over and we're finally starting a new bull market, and then complacency will set in. And you'll see it in TVIX, and that's when you want to be kind of adding to positions, getting ready for the explosion of volatility. And then when you get that, you take your money and run. So that's kind of what I'm doing there on TVIX. That's all I got for the video, guys. We're just going to continue to watch the markets. They're looking pretty weak, but again, I think we're probably going to just kind of hold where we're at today, not do too much more besides just, this sell-off. And we'll take it back up next week. Thanks, and talk with you later.